Ladies and gentlemen of the Kaspa community, the moment we've all been waiting for is finally here. Kaspa, as well as the rest of the altcoin market, is getting ready to rip to the upside in price action. Monday morning, hours before the stock market open, I start making huge purchases in Kaspa and other select altcoins, all based on fundamental data that we're going to detail in this video, swapping from an all cash position into a 100% risk on portfolio. Members of the Kaspa community, specifically subscribers to this channel, recognize it's these FOMC meetings taking place every 45 days that have created the hugest price action to the upside in Kaspa. This up and coming June 18th FOMC meeting is set to do the exact same thing. It's the quarterly economic report. Powell stepping up and talking about rate cut adjustments. At the prior meeting, they were projecting 2 rate cuts, and economists are saying Powell's going to have to reduce the amount of rate cuts for 2025. For one, this packs in a potential massive surprise. In the event Powell comes out and he sticks with 2 rate cuts, the markets are going to undoubtedly rip to the upside, and even the most bearish traders will agree with that. As we dive deeper into these fundamental macroeconomics, all the way down to intraday factors, as well as big picture zoomed out, we're going to see a clear-cut picture that even in the event Powell comes out with 0 rate cuts, Kaspa and altcoins are still ready to make some serious gains. This information is going to shape the 2025 bull market peak and beyond. Just recently, big creators have been talking about how the Bitcoin 4-year cycle just broke. Previously, traders were waiting 540 days after the Bitcoin halving, cashing out, waiting 18 months, buying back on the low, and so on. This model is not going to work anymore, and the model that's taking its place is far more connected to central bank monetary policy. This was the original design in Bitcoin. When Satoshi created the Bitcoin halving formula, he was directly focused on this liquidity cycle. Every 4 years, the central banks pump cash into the economy to stimulate jobs and GDP growth. After they do that, they have to counteract the inflation and pull this cash out. The bond market is central banks' #1 tool for controlling this 4-year liquidity cycle. This is the Fed's portfolio of bonds. When they're building a larger portfolio, that's known as quantitative easing, because they're buying bonds off BlackRock and other big institutions, giving them cash to stimulate the economy. When they're doing quantitative tightening, they're selling those bonds to BlackRock, getting the cash off them, taking it out of circulation. And the yield on the bond plays a huge part in this on a big picture, but also intraday. And we're going to show you how Monday morning we are able to use the intraday bond yields to get a sentiment read that this Friday's labor market print was going to be bullish to the upside, thus changing my all cash position into a risk on portfolio. During the last cycle, bond yields dropped to 0 on February 20th. Thus, investors aren't interested in putting cash into bonds if they're only getting a 0 APY back. The 1-year bonds reached maturity February 2021. This is when Tesla, Palantir, GameStop all started peaking. The stock market ripped to the upside. Bitcoin formed its first $65,000 top. The total 3 also had its first breakout, and then 2 breakouts afterward as Bitcoin dominance fueled the next leg up. When we jump into the intraday bond chart, this is where things get very interesting. The bond market is closed over the weekend, and this is what creates massive moves on Monday. The institutional traders are waiting for the world of TradeFi to open up, get that information and then rebalance their portfolio. On TradingView, the US 01 chart switches over from Friday to Monday at 6:30 p.m. in Vegas time, and instantly the bond market started to spike up. Looking at the dollar's value chart, DXY, it started to rise up at the same time. Both of those signals, rising bond yield and rising DXY, is very bearish. And this played out hand in hand intraday on Bitcoin and the total 3 chart. Once TradeFi opened back up, there was a fake out to the downside. Hours later, the bond yield started dropping below the opened, and the DXY started to completely tank. This is an extremely risk-on signal. Based on the details of this post we released Sunday, this is what gave myself and group members cues to load the bags now. There's an additional source of liquidity that's going to play a major role in this 2025 bull market. Everyone's been talking about how tariffs have had a negative impact on crypto and the stock market. Meanwhile, all the taxes that the tariffs have collected are going directly into an account known as the Treasury General Account. This is used to stimulate markets, very similar to the Fed's balance sheet, although this isn't bonds, it's just direct cash, and it's controlled by Scott Bessent, a new White House employee. Recently, he drew this down, meaning he injected all the liquidity into the economy, bottoming it out on April 9th. That's the exact day that the Fed officially reduced quantitative tightening from $65 billion a month to only $25 billion a month. When you factor in they're only taking $25B off the table, plus all this cash that they just dumped into the market, they created a temporary quantitative easing effect. Bottom line, the economy is net positive in liquidity, adding all these factors together. This means that the altcoin market cap, as well as Kaspa, during this FOMC meeting is ready to see a move to the upside. Plus, we've got the surprise catalyst. The Fed stays with 2 rate cuts for 2025, which will be a total rocket ship. As we unpack the details of the Treasury General Account, which is all cash, compared to the balance sheet of the Fed, which is bonds, BlackRock, and institutional players, we find an entirely new narrative centered around meme coins. This is how we are able to get group members trading plans 72 hours ago for MOG, Andy, and Turbo. And as we break down where the Treasury General Account goes, it starts to build a case that meme coins will have a very strong performance this cycle. Bottom line is the Treasury General Account is going to be a major part of the 2025 bull run, completely different than central bank handing money to BlackRock and institutional investors like classic quantitative easing that will target Kaspa and the more technically advanced layer ones. When you're funneling a bunch of cash from tariffs and other taxes back into the economy through everyday people, you are going to see an enhanced meme coin cycle. When this bull run is said and done, will you be able to look yourself in the eye and say, I did everything I could to maximize upside gains? In months, you will be put to the biggest test of your life. When your bag starts ripping to the upside, your emotions are running high, you're going to have to analyze macro and technical and on-chain data all at the same time and make decisions in the real world. Inside our VIP group, we are constantly drilling and training members so when these crucial events happen, they've already gone over all this information to the depths of every detail possible, from bond yield, DXY, FOMC data drops, technical analysis, on-chain data, that they'll be able to make a confident decision that they can respect for the rest of their life. The Bitcoin 4-year halving cycle and its connection to crypto is just starting to unwind. This has been a blessing in disguise for Kaspa, giving the dev team more time to build on chain before central banks start the bull market. And it's this new system of processing FOMC macroeconomics, bond yields, the bond markets, that's providing massive insight to traders. Now, this system will work for the next half decade, and then an entirely new approach will take over. Get on top of this insight while it's the hot trending way to trade. Thanks for checking out this video, guys. We'll catch you on the next one.